Everywhere you look right now, someone's talking about AI. Investors, CEOs, politicians, your neighbor's dog. Everyone seems convinced that artificial intelligence is going to change everything, and maybe it will. But here's the question no one wants to ask. Is this just another bubble? Because history doesn't repeat itself exactly, but it does rhyme. And if you've been around long enough to remember the dot-com boom, this current AI frenzy might be giving you déjà vu. In this video, we'll break down what's really happening behind the scenes. Why AI is being hyped as the next internet, how much money is actually flowing into it, the warning signs that look eerily familiar, and what smart investors should do before the bubble pops. This is Budget and Build, and I help you understand money, markets, and investing without the hype. If you find this helpful, make sure to hit like and subscribe so you don't miss the next one. Let's start with the obvious. AI isn't new. We've been talking about artificial intelligence for decades. What's new is the explosion of accessible AI, ChatGPT, Midjourney, Claude, Gemini, tools that anyone can use instantly, often for free. In 2023 and 2024, AI went from a niche technology to something that felt world-changing overnight. Companies raced to add AI to their products, their marketing, even their company names, and share prices followed. Sound familiar? It should. The same thing happened during the dot-com boom in the late 1990s. Back then, simply adding .com to your business name could send your stock up 200% in a day. Today, adding AI has the same effect. Let's look at the scale of the hype. In 2024, global investment in AI startups hit over $70 billion, according to PitchBook. And that's just private money. Public markets tell an even bigger story. Nvidia, the company that makes the chips powering AI systems, saw its share price skyrocket more than 500% between 2022 and 2024. For a while, it was worth more than Amazon, Tesla, and Meta combined. And while Nvidia has real revenue behind it, many of the companies riding the AI wave don't. Hundreds of startups are raising millions with vague promises like AI-powered analytics or AI-driven productivity. Translation: we don't really know what our business model is yet, but it sounds futuristic. Here's the pattern that bubbles always follow. 1. A breakthrough technology emerges. 2. Investors flood in chasing early profits. 3. Valuations skyrocket way beyond reality. 4. Competition floods the market. 5. The profits don't materialize and the bubble bursts. The technology survives, but most companies don't. That's exactly what happened with the internet. By 2002, most dot-com stocks had lost over 90% of their value, but a few, like Amazon, Google, and eBay, came out stronger than ever. So the lesson isn't that AI is fake or overhyped. The lesson is that the business models around it are unproven, and investors are forgetting that difference. Let's look at valuations. The average AI-focused company that went public in 2024 was trading at over 30 times revenue. That's 30 years of income just to justify the current price. For comparison, a healthy established tech company trades closer to 8 to 10 times revenue. That gap is pure speculation, people betting on the future. And here's the tricky part. The future might still deliver, but it rarely delivers fast enough to match the hype. Even Nvidia, which is currently printing money, has warned investors that demand for chips could eventually plateau, because once every major data center has upgraded its hardware, the spending boom slows down, just like every other tech cycle in history. Now, some will argue, this time is different. And they're half right. AI really could be as transformative as the internet, maybe even more. It will reshape industries, eliminate jobs, and create new ones. But the economic pattern isn't different. In every boom, people overestimate what a technology can do in 5 years and underestimate what it can do in 20. Right now, we're in that first phase, wild overestimation. Everyone wants a slice of the next big thing, even if they don't fully understand it. That's why we're seeing companies with no revenue or working products valued in the billions. The technology will survive, the hype will not. Let's zoom out. In the 1920s, the telephone and radio boom created massive excitement and a brutal market crash. In the 1960s, it was electronics and aerospace. In the 1990s, it was .com. In the late 2010s, it was crypto. Now, it's AI. Every generation has its big story, a world-changing technology that really is revolutionary, but gets swallowed up by speculation and greed. Here's what makes the AI boom particularly risky: concentration. Almost all the profits right now are flowing to a handful of companies: Nvidia, Microsoft, Amazon, Google, and a few data infrastructure firms. That means the AI rally isn't broad, it's narrow. And when a rally is that concentrated, it's fragile. If earnings disappoint, or regulation tightens, or demand slows even slightly, the correction can be fast and painful. And that risk ripples through the entire market, because those same few companies make up a huge percentage of major indexes like the S&P 500 and Nasdaq. So, what should you do? First, don't panic. Bubbles only hurt people who buy at the top or sell at the bottom. Second, separate the hype from the infrastructure. The AI tools themselves, chatbots, image generators, automation platforms might come and go, but the companies building the infrastructure, chips, cloud computing, data storage, will keep making money long after the hype fades. Third, stay diversified. Don't go all in on any one trend, no matter how exciting it sounds. If you're investing through a broad fund, like an S&P 500 or global index fund, you already have exposure to AI through giants like Microsoft and Amazon without the single stock risk. And finally, think long term. The internet boom looked like a disaster in 2001, but 20 years later, it transformed the global economy. AI will likely follow the same path. Chaos first, clarity later. The winners won't be the ones who chased hype. They'll be the ones who stayed invested and waited for the dust to settle. AI isn't a scam, it's a genuine revolution. But revolutions always attract speculators before they reward investors. We're watching an incredible technology become a financial mania, and those two things are very different. The key is to remember that innovation doesn't always mean investment opportunity. If you keep your emotions in check, stay diversified, and focus on long-term growth instead of short-term trends, you won't just survive this AI boom, you'll probably profit from it. If this helped you understand the AI bubble a little better, give the video a like, subscribe for more no-hype investing content, and tell me in the comments, do you think AI is a real revolution or another financial bubble waiting to pop?